Hey guys, what's up? Alec back with the daily stock market, and look at that. We see some green appearing in the stock market. We have the Fed's meeting today, and if Jay Powell is a little bit more dovish today, we can see a green day the rest of the day today and a green day into tomorrow also. Like I said, we're just going to do a quick video today, a quick rapid fire. We're not going to go too much in detail, but we're going to go over many different stocks. I know some of you guys like this style of the video, so drop a thumbs up if you appreciate it and comment below if you want to see more content like this. All right, so NEO is the first one up, under $15 per share, up 5% on the day. And in the last 3 months, it's pretty interesting because it's dropped 37% just in 1 month. And if we scroll out to the past 3 months, we see a 54% drop in NEO's share price. Now, there is a lot of things going on with Chinese-based stocks, so there is a lot of risks in the short to midterm. However, in the long term, if you are a long-term investor, I think that this one could have huge upside. It might be something that you want to stuff into your long-term portfolio, something like a Roth IRA, for example, and just set it and forget it. I think in the next 2 to 3 years, NEO can really up their game and be a dominant player. They have 128 million in volume, by the way, so they're one of the most traded stocks in the stock market. After that, we have ARKK up 2.8% on the day and down 41% in the past 3 months. This is a stock that's taken a fall off the cliff. It's ran by Cathie Woods. There's 23 million volume pumping through this, so it's a very heavily traded stock, and I think they can have a roaring comeback season. As you can see, for a long time, Cathie Woods stock between 2018 and 2020 was trading between $40 and $50 per share. So we're entering that zone of 2018 again, when nobody knew who Cathie Woods was, and Tesla didn't skyrocket and make all of her gains for her like we saw here. So we're getting back to a fair valuation under $50 per share. I'm definitely loading up for long term, and this is another one that I'm putting in my Roth IRA account. BUBO TV is a stock that's under $10 per share. It's up 4% on the day, but in the past month, it hasn't had anything going on, down 39%, and it's even worse if you scroll out to the past 3 months, down 61%. So this is a stock that's been absolutely obliterated, down 80% from highs to $6 per share. I think that this is a stock that could pick up the pace in the next 1 to 2 years. There could even be some short-term momentum with this stock. Once we see the stock market coming back as a whole, things like FUBO TV and other stocks that have lost like 80-70% of their worth, I think they can have strong comebacks and raise like 100, 200, even 300% in the next 12 to 24 months. So FUBO TV definitely is a hyper growth behind the stock price, and the risk versus reward at $6 per share is getting worth it. But remember, there is risks with this one, and there's typically more risks with stocks that are under $10 per share. SOFI Technologies, the next stock we're going to talk about, only at $8 per share, under $10 per share. And in the past 3 months, it's been destroyed. The past year, it's been even worse. From all-time highs, they're down 64%. They have a stadium named after them. The Super Bowl was played at their stadium. However, that didn't help their stock price at all. This could be another one like FUBO TV that could have a huge bounce back. I expect at least 100% gain on SOFI Technologies over the next 12 to 24 months, which would be a great gain for something like SOFI Technologies. I think safely I can say that in the next 12 months, they'll be closer to $15 per share. In the next 24 months, I could see them above $20 per share. They also have 41 million in volume, by the way. So again, this is a very highly traded stock. Unity Software with only 3 million volume. All right, a little bit less traded than the other ones that we've been talking about. However, they're still down 45% in the past 3 months. And from their peak, they're down around 60%. This is a metaverse stock that everybody forgot about. The hype was very real for them between May and November. Their stock price went up significant amounts, all the way up to almost $200 per share. But they've cooled off significantly, and they are currently sitting at the IPO price Okay, I think this is a good long-term one. This is one that you're going to want to be invested in for 3 to 5 years. And most of the metaverse stocks, anytime you hear someone talking about a metaverse stock, you typically want to be involved with them between 3 and 5 years. You know, even 2 years is just too short for the metaverse. And if you don't really know what they do, they're more behind the development side of the video game software. It provides software solutions to create, run, and monetize interactive, real-time 2D and 3D content for mobile phones, tablets, PCs, console, and augmented and virtual reality devices. So basically, they do it all, and they're definitely one that you want to have at least on your watch list. They're a negative earning company, by the way, and they're pretty close to that 52-week low, and they're sitting close to an all-time low. They're on the brink of positive earnings. So once they become a positive earning company in the next 6 to 12 months, I believe that could happen. I think that, you know, the share price and the analysts will like Unity a lot better. Now, Lemonade is one that I definitely want to do a deeper dive on, but we'll go over them brief today. Now, they're up 7% on the day, one of the biggest movers on the day. However, they are one of the biggest losers on the year, down 82%. Lemonade has been destroyed. The volume is only 1.4 million, so people are starting to lose interest in the stock. But that's typically when you want to start buying, is when people are losing interest, forgetting about the stock. You don't want to be buying typically stocks that have like 40 million volume, 80 million volume, and they're at all-time highs. You know, this stock is easily at an all-time low. It's never even been this low. It IPO'd at $50 per share. So under $20 per share, I think it's a great place to load for long term. However, this business model is a little bit risky because they have some really big players in the space to compete with, but at a $1 billion market cap, which currently is their market cap, after they lost a lot of their value, I think the risk versus reward could definitely be there. And this is a stock that could 10x potentially in the next 3 to 5 years. So definitely have a long-term vision with this. But if you get a 10x growth, which would be 1,000% gain over the next 5 to 10 years, that could be amazing. Something like Lemonade could guide you there. But the thing is, it's extremely risky, so don't put all your eggs in one basket. I keep my Lemonade portfolio closer to like 1 to 2% of my portfolio or less, just because it is such a risky stock to be invested in. Google's also an interesting one. This is one that I want to talk about in a full video dedicated to top earners, or top tech stocks, I should say. All right, this has been a pretty good swing trade or option play too. As you can see, they have been forming a downward momentum, but they've been going up and down consistently. They have that support right at $2,500, where it seems like it's not going below $2,500, but then it typically skyrockets back up to like $2,700, $2,600 per share. But in the grand scheme of things, they're still up 25% in the last 12 months. They went on a huge run between March and November, up 42%. So I honestly want to see Google closer to a 52-week low. I think it's definitely possible that we'll see companies that aren't at 52 weeks low yet, like Tesla and Google, start coming closer to that 52-week low. Also, if you look at the volume, if we scroll down and look at the volume, you can actually see that it's only about 1 million. It's actually below 1 million. It's below the average. So a lot of people are afraid to trade something like Apple or Amazon, or excuse me, Google or Amazon, because the share price is above 2,000, which is a little bit intimidating for traders. It's a psychological thing. So once Google splits, which they've already announced the split, and once Amazon splits, I think we'll start to see a lot more volume pumping through these stocks. So you definitely want to get in before the splits happen. Don't forget that they are happening. A lot of people, you know, they put the news in the front of their mind for 1 to 2 weeks, and then they forget about it just because it hasn't happened instantaneously. So don't forget, Google is splitting, Amazon is splitting. Those could be huge positive catalysts for the stocks. And if Google goes below 2,300, 2,200, I'm going to start loading up, because I think the stock split could be very beneficial for long-term holders. Let's talk about Shopify. Okay, 8% up on the day. However, down 59% in the last 3 months. This has been one of the worst performing stocks in the last 3 months. However, the business model is fantastic, and I definitely want to be a part of it for a long term. long-term investors should definitely be looking at Shopify, because I think this is a stock that could end up splitting as well. They were probably getting close to a split or announcing a split when they were at like $1,600 per share in the past. They were at $1,000 to $1,600 for a long time, almost over a year, but they've had a massive climb, all over 300%. They've grown significantly from 2019, 2018. I think they'll continue to be a dominant player in the space. And right now, from let's just say 2020 or 2019, let's say, they're only up around 40% on their stock price with all the dips that they've had recently. So I think this is a buying opportunity for long-term investors. You know, they obviously shot up massive because of the whole pandemic and people at home were trying to start their own business model with Shopify, but that's basically all been erased and it's been brought back down to like 2019 levels. So if we see them below $500 per share, definitely loading up for the long term. In the next 1 to 2 years, I think they can definitely reclaim that $1,500 mark. And remember, that would be around a 200% gain on Shopify. And I rather play my cards with something like Shopify rather than like something risky like Lemonade, for example, because in my opinion, Shopify has a lot better chance of making it over the next 3 years and becoming a dominant player in their space. And they still have huge upside potential of 100 to 200%. All right. And then they also have that opportunity of a split coming up once they get back to that $1,500 mark, which again would just be great for the long term. So I think Shopify does have a lot of things going for them. They're also a Ottawa, Ontario based stock, Canada stock, by the way. Their market cap 69 billion, the PE ratio 21, implying they're a fantastic deal. They're at a 52-week low, and this is one I definitely want to do a deeper dive on in the future. So make sure you are subscribed with post notifications on if you like those deep dives and if you want to hear one about Shopify. I hope you guys did appreciate that video. Thank you for all the love and support you guys have been showing me on Instagram and YouTube. We're almost at 160,000 followers on Instagram. We've had over 500 successful testimonials of people who signed up for the close friends list. So if you want to read through some of those testimonials, go ahead and click on success number 4, success number 3, success number 2. You won't see these green ones that say like CFL, close friends list, because those are for the close friends list people only. There's a lot of information that I post daily, what stocks I'm buying, how much I'm buying, helpful tips and hints on puts and call options and everything in between. Anything dealing with the stock market, there's great stuff to learn on the close friends list every single day. All right, guys, remember, share this video with a friend, comment below, subscribe with post notifications on if you made it this far in the video, and I'll see you in the next one. Remember, don't time the market, buy the market. Peace.